through different perspectives like appraisers, underwriters, things like that, that help you serve your customers better. So today's goal is to talk about something called processing. We'll define that in a minute. But our guest today is Sybil Hell. I had to say it. Yes, that is her last name. And what's even funnier that I love to say all the time is her husband is a worship leader. Isn't that great? He doesn't use that name. So Sybil, how long have you been doing this business?
I started in 2001.
23 years.
Yes, it's been a very long time.
And if you don't know, Sybil's nervous right now. Just everybody wants you to know. Okay, 23 years. Doing the same job?
Yes. Yep.
If you had to take a wild guess, how many loans have you handled in this 23 years?
Oh my gosh, I don't even know that I ever kept track of that. I know that I've closed over 40 loans in a month. So anywhere between 20 and 40 loans.
So 30, 360 times 23 years, you're well into about 2,000 loans. So I just put that for perspective that why we brought Sybil on, because today's goal is to explain this step called processing that you may not even know exists. So Sybil, tell everybody what is processing?
Processing is when the loan officer takes the loan application, they bring it in, and we are the middleman between the loan officer and the underwriter. We verify all of the information. We verify income, assets. We have to make sure the name is correct. We have to verify the social security number, employment. We have to verify everything to make sure all the information is correct on the application for the underwriter to review.
Okay. From a loan officer's perspective, real estate agents, that this is a very important partner to a loan officer. I kind of relate it this way, in case you've never heard of a processor. Every lender has them. They prepared for underwriting, because if a loan officer had to do it, it'd kind of be like me flying the airplane as a loan officer, which is what happens in a loan. I'm flying the plane. I'm directing everything, making sure it gets set up. We do the safety checklist. But if I had to fly the plane and be the stewardess on the plane, it wouldn't be a good flight. I wouldn't know where we were going. So that's where a processor comes in. They're that stewardess on the airplane that the customer sees during this time of accepted offer to closing, that's coordinating all the paperwork for us. So, okay. So Sybil, the goal is here, we want to help real estate agents understand. So the first question I want to talk about is, you review the offer to purchase. Let's talk about some of the things that you see happen. We're not saying every real estate agent does this, but there's some commonalities that happen that affect underwriting, that slow things down, that I just like us to share with the real estate agent community of you see happen. So what are some things you see?
Well, with the offer to purchase, we basically have to verify that the information matches the application. So the borrower's name, if their name is So we have to go back and either get an amendment to the offer to purchase, asking for them to correct the name to match the application, or we have to correct our application, which in turn sometimes can require a credit pull, a recredit pull, which depending upon when credit was pulled, could change the aspect.
Right, could change the whole loan because the credit score can change and all that.
Yeah.
So what name needs to be on the offer? Can we use a nickname? Do we have to use middle names? What should we be doing?
So I guess I've always looked at it as this is one of the biggest investments someone's going to do. Purchasing a home is the biggest thing they're probably going to purchase in their life.
Yeah.
So why wouldn't you use your legal name?
Right.
Jonathan L. Smith. You don't need to do Jonathan Lewis Smith, but I would think you would want your full legal name on the document.
Yeah, because it's going on the deed.
Mm-hmm. So and you have to sign everything through the transaction that way.
Right.
It's not John Smith later, or it has to be Jonathan L. Smith.
So the preferred method is legal name, middle initial, legal last name, any juniors, seconds, thirds, but really work with the loan officer and make sure everybody's on the same page.
Correct.
Okay. What else do you see on offer to purchase that could help make this process smoother?
There is a section on the offer to purchase that gives a date that the real estate condition report was completed.
Okay,
We have some investors or underwriters that are not going to require the real estate condition report. We have some programs that require it. So when you get the real estate condition report, if there's anything on there like asbestos, water in the basement, electrical issues, and they require the real estate condition report, that could lead to other issues, home inspections of like the basement, or if there's asbestos, an inspection, and if it's something that's harmful, then it has to be remedied. So those type of things can cause additional inspections and delay closing because you need to get more information on it.
so if the homeowner on the real estate condition report checks that there's water in the basement, can they make comments to like say what they did?
But it was remedied it.
Yeah,
I've seen that, and then I've not had comments come back. But when it's not noted that there's something has been repaired, then for sure I've had underwriters ask for an explanation or an inspection.
okay, so any yes answer to the real estate condition report would be very helpful to get this loan through with the least amount of bumps if they address why it happened and what they resolved.
Yes.
Okay. What else you got on your list?
There's things when it's written in the offer that the microwave, the stove, and things are included, but then they say the bookshelves in the basement, the patio, the place set in the backyard. The underwriter will come back and say they want that removed or there's no value. And we have to ask for a lot of amendments for that because it's noted in there, but they never say add no value. And they always come back and ask for that to be either removed or stated no value.
Any opinion on why is that an issue if those are in the offer and don't say no value? I have one as a loan officer. I want to see what you want to say.
Well, you're taking out a loan for your home.
Yes.
And you're not taking out a loan to pay for the swing set or the shelving in the basement. Those are just all added things that are in the house.
Yeah.
It's not actually part of your home loan.
Agree. That's how I want to answer. Because when an appraiser goes out to the house, and if the offer to purchase says that a swing set and a snow blower are included, he or she, the appraiser, is supposed to value the property based upon what's in the offer. And so it can be perceived that if it doesn't, the offer doesn't say no value to those items, that's the buyer is paying, the purchase price is also paying for those items. And we just can't have that in lending. So not a problem doing that, right? I mean, the seller can leave stuff behind.
Yeah.
It's just free.
Yeah.
It has to be free.
It has to be.
Okay. What else you got? You thinking?
I know that there are times when we get the offer to purchase and we have to go back to the realtors because a page doesn't have a signature or the amendment isn't fully signed. We just need to make sure that when we receive the offer to keep moving forward in a timely fashion, that every page is signed, whether it was countered, whether it was rejected, there needs to be initials, and we need to have a fully executed contract because sometimes if we don't have it and we're waiting for the realtor to send the information, there has been times where I have had appraisers even state, I don't know if they've accepted this.
Yeah.
Like,
okay.
I don't know if this value is the right value. Is there an amendment coming? Did something change? So it even can go further into the process where it can hold up having the appraisal ordered because sometimes they want the fully accepted offer in order to continue with the appraisal.
Okay. Let's talk about line, I've got it in my notes too. So let's talk about line 592 in the WB11 addenda. It's talking about the attached. And I see agents put on there what they're including with that 11 pages of the offer, because you got to state that there's other pieces of paper in this legal contract. What have been the things whatever they list there, what happens when they list it there?
Well, whatever's listed there, whether it be a home inspection or a bid, if it states like bid for driveway or something, we need to have that documentation. And then depending upon what's on that documentation, if it says home inspection and the home inspection comes back and there's these things that need to be repaired that maybe are being repaired after closing or the borrower is getting a seller credit for, they could require us to get them fixed beforehand because it's, could be something that's wrong with the home and we don't know what it is.
Okay.
So that is a big question of, you know, depending upon what's there, but a lot of times stuff is there like home inspections and we just don't want to see that there.
Yeah, it's a balance, right?
Mhm.
We totally understand that as real estate agents, you've got to put it there. It's a legal contract. And what's part of this whole offer? We just want you to understand that once that happens, we don't have a choice but to show an underwriter the whole legal contract of what is or is not going on here. So they have an understanding of the whole picture. So yes, use it, right? But we just want you to understand what happens next with that. Anything else that you got with the offer that can help real estate agents as we go through the underwriting process?
There's just a couple other things. The addendum A, when there's other addendums marked like addendum S or the other addendums, sometimes they're not included. We have to ask for them. But then sometimes the house is built after 1978, but the addendum S is still marked and we'll ask for it and they'll be like, well, the house is built after 1978. Okay, but you put it in the offer. So then we need to get an amendment removing it, even though we know the house was built after 1978. So it's just additional paperwork. We see a lot of times for the address, West Dallas, Milwaukee.
Oh, I know where you're going.
So then we have to ask for amendments because when we go to the USPS search and we start to do the process of the loan, the offer will say Exonia, but it was actually in Oconomowoc. So then we have to have an amendment drafted correcting the address to match the USPS and update to make sure everything matches with the address.
So we're going to talk about that in a minute when we talk about verifications, but use some initials. What does USPS stand for?
USPS is the United States Postal Service, and we go to that website to type in the address and verify it. And when we type in 1234 Main Street, Oconomowoc, Wisconsin, it will pull up and tell us what county it's in. If it's not, it'll give us a red error, and then we'll do some research and find out that, oh, it's actually Exonia or Waukesha. And so then we need to have that corrected.
Because there's a difference between the legal address and the mailing address, right?
There can be.
There can be.
Mhm.
I had another question and I can't remember what it is. Okay, what else do you have that has come up in the offer?
Other things that we've seen are the financing type. We'll get offer to purchases that say conventional, but we have FHA financing.
Okay.
Sometimes the underwriters will condition us to have an amendment correcting the financing. I'm not sure where the communication, how that goes with the loan officers, if that's something that can be addressed up front or whatnot, but those are some things that we have had some underwriters come back and say we need an amendment changing the financing to FHA or USDA.
And I can see that happening where as a loan officer, I've communicated with you as a real estate agent and to the borrower that, hey, I did the max pre-approval, most likely we're going to use FHA financing. Everybody remembers that. But then when they found a house and it's a lot less price, maybe conventional work, and we didn't communicate well to do that. So, but that I was surprised that you said that one comes up in the finance contingency. Okay.
Mm-hmm.
What others do you see common repairs to the offer afterwards?
I think that's about it.
Okay, so we're not saying you as an individual real estate agent have these things. What Sybil is saying is this is the stuff we see from a various real estate agents. Not saying it happens every time, but we just want to make you aware of the offer because we know that every time a loan officer or a lender comes back to you and wants amendments, it's more writing. You got to track people down. So we just wanted to share that. Okay, let's talk about home insurance. So home insurance, a borrower goes and gets a quote, comes back, and the insurance company has questions about the property. I was used to a long time ago that they just found the stuff online and did all that, but now it's becoming more prevalent that they are having more questions that we have to involve real estate agents with. Mm-hmm. And so I thought we would share this, really thinking of the thought process of you're the listing agent asking the homeowner these questions up front, and maybe you can post it in the MLS notes for the buyer agent or somehow communicate it because it just makes things go faster and it's less that they have to be interrupting their seller and trying to figure it out when we're in the middle of an offer with deadlines. So what are insurance companies asking on a regular basis that we have to go back to real estate agents and ask for?
Well, the two main ones are the age of the roof and the age of the furnace.
And has any insurance company told you why that is coming up?
They have not actually given me, excuse me, came out and said why. I'm assuming, and that would just be.
I've asked. I just want to give you a chance to answer that.
Yeah, I have just trying to keep the process moving. So then I just go on and ask the question and get it back to them. But
yeah, so the reason they're being asked, we're being asked this when a person goes and gets their home insurance quote is because of the safety of the house. The roof is the covering. And they want to know how old it is to know if that is going to succumb to damage from high winds, hail, tornadoes, if they're going to stick, whatever. So that is a concern because it's the first protection of the house. And then they told me with the furnace, that is not only what heats the house, which insurance companies not really, I would think, care about, but it's more about it's a safety fire hazard. That's a gas line coming in. Mm-hmm. It can leak CO2 with a cracked something in the middle of the furnace. Can't remember what it is off the hand. I had one, and it leaks and it can harm people in the house. So that's why they want to know those two things. So if you're taking a listing, if you could just ask those up front, every loan officer out there is going to appreciate that you have it up front because the borrower can have a much more efficient time getting their home insurance quote and then tracking it down. Appraisals. We order the appraisal. Realtors ask me all the time, like, can you order it right away? Can you order it right away? Can you speak to what has to take place from accepted offer before we can actually order the appraisal? Because there's some compliance things, right?
Yes. I mean, on it, the borrower needs to sign the application. We have to have the borrower's intent to proceed in order to order anything. Because when you take the application, you ask them if you can pull their credit. Okay. You have to get their permission to pull their credit.
Written permission for that.
So that you can move forward with the loan application. We need to have the intent to proceed to be able to order anything else on the loan. Any, the appraisal, verifications, or anything. We cannot request anything until we have their intent to proceed for compliance purposes.
And an intent to proceed form that lenders have to do, was put onto us by the lending rules, is we can't start doing things on the behalf of a borrower until they put in writing that they wanted us to proceed with the process. So the longer it takes the borrower from, the longer it takes for us to get the offer, mm-hmm. The loan officer has to prep the loan file. A compliance department probably has to check it before it goes out. And then we got to get the borrower to actually sign it. Well, this could take days sometimes, depending mm-hmm. upon the borrower schedule and the procedures. So, once you have the intent to proceed, mm-hmm. what else could slow down ordering the appraisal?
I mean, once we have the signed intent to proceed in application, unless we don't have the offer for some reason.
That's what I was thinking.
That would be the only thing that I can think of that would slow it down, because we need to have the offer to purchase to request the appraisal. Because
the appraiser is going to ask for it.
Mm-hmm.
And with a VA loan, they won't even assign it until you have one. Or am I misunderstanding that?
Until you
upload the offer to the VA portal,
mm-hmm.
they won't even assign it to an appraiser until they see it, right?
Correct.
Yeah. Because like we're ordering appraisals, yes, lenders can do that on their own as long as they're following the compliance thing of rotation. A lot of lenders will use an appraisal management company, but the VA is the one that we go straight to the VA, and the VA assigns the appraiser. So they've got their procedures that we have to follow. So that is where, just to answer them, like, well, we can't order the appraisal. The processor can't order the appraisal right away. Okay, verifications. We touched on this a little bit. Let's talk about, to give perspective, just start rattling off what's all got to get verified before we go to underwriting.
Well, we verify the borrower's name off of their ID. We verify employment. We have pay stubs and W-2s that we use, but we do have to get a verification of employment from the employer themselves directly. We have assets, so we need to obtain bank statements. Current bank statements are always a good thing. And current pay stubs. When we have pay stubs or bank statements that are, 3 to 4 months old, there could be large deposits that, come up down the road, or they may have even changed jobs or got a pay raise. So having current information that we review, Social Security numbers will verify off W-2s. So we need to have W-2s and tax returns.
Okay.
We will verify the address against the USPS. We will pull the tax bill to verify.
Let's go back to the address a minute.
Mhm.
You're verifying the address of the house.
Mhm.
Are you verifying any other addresses?
We are verifying addresses if the borrower owns any other properties. We have to verify that address.
Okay, current where they currently live?
We don't pull USPS on that.
Okay.
We base that off of their driver's license and their W-2s. And if something doesn't match, then we have to ask them for a letter of explanation. But I don't do the USPS based off of that. But
Okay.
we do.
So it is checked.
It is checked, yes.
Okay.
But it's not checked by, I guess, USPS. But
Okay,
yes, we will look and verify, and then we'll ask why there is a discrepancy in the current application and their driver's license or on their income documents.
okay. What else you got for verifications?
We will verify tax return information. We will order transcripts through the IRS to verify that what they are what they truly are filing is what is on with the IRS.
Okay. Do we verify anything besides the borrower? I'm leading her to an answer that I know. Government loans.
Oh, okay.
What do you have to verify when it's an FHA, VA, or USDA loan that is unique to the real estate agent?
We need to verify that borrowers, agents, loan officers, that anybody party to the transaction is not on a banned government list.
So title companies,
Yes.
appraisers.
Anybody that is in the transaction has to be verified.
So real estate agents, you do have one check when it's a government loan to make sure you're not banned from the federal government. Also, I'm just thinking with that, with the verification of them. How often, if you had to pick, if you looked at 100 loans, how often do you have something that's trying to be verified that was blatantly false? Not that they made a mistake keying it in, a borrower telling us their social security number wrong by one, but somebody maybe tried to do something.
I've had maybe a handful of times we've found
Okay.
tax returns. I mean, I don't see it very often, but it has happened. Tax returns that we have are different from the transcripts that come back, is the one that's happened a couple times.
And so that's why we're doing the verifications, because everything about this person and this transaction gets third-party verified to make sure that we have the truth going on, so that we are doing a good loan in the process. It's not something that any lender that you work with does on their own. It is mandated by the loan lending rules and the mortgage insurance rules and all that. This all gets verified to be accurate and true. How on a loan file, because we probably didn't cover everything. If you just had to pick a number off the top of your head, verifications that get done, is there 10 things, 20 things, 40 things, 50 things?
I mean, honestly, it's going to vary on the loan depending upon how many employers the borrower has had, depending upon what kind of assets they're using. I mean, there could be 20, 15, it just would vary.
Okay.
It all just varies on what type of loan you have and what scenario the borrower has.
Okay. Title and title commitments. So title company gets hired to do the seller's title research and the buyer's research. Sometimes it's the same title company, sometimes it's different. Let's say there's two different title companies. Do we care what the title company for the seller side finds for the purpose of approving the loan?
For the seller side, we don't have to take care of anything that would show up on the seller side.
Okay.
So the seller side title, if there were judgments and whatnot, the seller side would have to take care of that at closing.
Sure.
To verify that, either they're paid or pay them at closing. So we don't have to,
Worry about that.
we don't really have to worry about that.
We're worried about the buyer side title.
Mhm.
What type of things have you seen that comes back with a title that maybe real estate agents, remember, we're educating real estate agents, like what could they have maybe asked at a listing or asked their buyers that would help the title search and not have issues to go back and forth with title all the time?
I mean, the things that show up on title are judgments that would need to be resolved.
Okay.
On purchase transactions, there really shouldn't be any judgments for the buyers that show up, but there can be.
Okay.
And we can work to get those removed if the borrower needs to know that they still need to take care of them, because technically they don't own the house yet.
Okay.
A lot of the stuff on purchases I see as like the seller side, whether there's prior liens, judgments. For FHA loans, we just had one, which I have never knew after the 23 years, which I don't know if it's, but we found out that FHA does not allow encroachments. We had a barn encroachment and they weren't sure. They didn't have a certified survey done. And the borrower or the seller was like, well, I think it's just over their property line.
Yeah.
And so we were trying to do all this research, and because the underwriter came back and said, sorry, we can't do it because there's an encroachment. And we were like, oh my goodness. So the sellers actually moved the barn.
Oh my gosh.
They actually moved it so they could close the loan. Luckily, it wasn't like a huge barn. They called it a barn, but I guess it was not really a shed. But
Yeah.
But on the real estate condition report, which this goes back to, the borrower mentioned the barn being possibly on the neighbor's yard. And then that caused questions. And then they said it was removed. Title said it was removed. We were all thinking we were good. And then all of a sudden the underwriter was like, yeah, it doesn't work that way. Like, we still need to prove that this isn't on their property because
Right.
FHA doesn't allow encroachments.
So when a real estate agent's taking a listing, if there's things like, if any of these are shared with a neighbor, a driveway, a well, a septic system, buildings on other property, access to a piece of land that has to allow them to walk through that land. The title company is going to look for that, right? And there should be recorded documents.
Correct.
And so the title company is our filter for that. And if the title company can't find them, then we have to get something done.
Something drafted.
Because the underwriter is going to ask in the title commitment if the title company shows it. So, okay, so helping them. All right, so we're close. We went through our notes, Sybil, that you nervously put together. Any other wisdom from a processor's view of getting a loan to closing that would affect real estate agents? And maybe there's nothing, maybe we covered it all, but I just want to give that opportunity for any generic thoughts that still are hanging out there.
Yeah, I mean, I think we covered it all.
Okay, awesome. Well, everybody, thank you for tuning in. This is Ask ProVisor. Why we do this is we try to bring relevant information to you as a real estate agent to help you do your role better to represent your buyers and sellers, to make this whole legal process a lot easier to do, because there's a lot going on. We do this every second Wednesday of the month at 10 a.m. Next month, we are going to have a legal counsel from the WRA, and we're going to talk about things in the offer to purchase that need clarification. One from a lender side, I know we really want to talk about is the finance contingency. So you're going to want to tune into that one. That is going to be the second Wednesday of September at 10 a.m. Can't think of the date right now, but we look forward to seeing you. These are also stored on YouTube. Just search Ask ProVisor and you'll see all the past ones we've done, so you can catch up on all the great things we've been talking about. Thank you.
Thank you.